Welcome to Trading Lounge and the US indices for Wednesday, June the 22nd. So, I think that we just need to be a bit philosophical, and we need to be open, and we need to be flexible. I don't think we should marry any particular count that you may have in your mind unless you're absolutely certain about it, because I can see that there can be a whole variety of counts here, and I think that we need to approach it in a logical way and step by step until we have an answer. So there is a situation where we can have this alternative wave 5 low in place here. That's one count. If that was the case, for example, then I would want to see from this low here, I would want to see 5 waves up, a decent 5 waves up to, close to the 4,000 somewhere. Secondly, then if we got that, then the market would pull back 50-60%, and based on those 5 waves, then we would look to go long. I've been through many lows, and sometimes you get lucky enough to sort of pick a low, but I never really trade them unless I'm just playing around, scalping intraday and building a case. I always look to the closest largest number, and then I look for a classic trading levels pattern on that number. So we did this last time with the 2,500 with the S&P, exactly the same sort of thing. So I think we had a much clearer low at that particular point in time. It was a bit easier to understand, but this one's a little bit more complicated, and there's other patterns at play here. So the first step, if the market's going to be bullish, then we need to see a nice impulse wave to the upside, and we'll buy the pullback. It's that simple. So the next situation is the bearish side of the market. Now, with the bearish side of the market, I can see basically two plays. I can also see on the bearish side of the market, this particular count as an A and a B and a C down here. I just like to keep things as simple as possible, 1, 2, 3, 4, 5, A, B, C, if I can, So I sort of tend to push it that way a bit. Now, I know that this down here can be counted differently as well. I understand, in fact, it can be counted down in three different ways. So that's not really sort of helpful either. So what we're trying to find, we're trying to find a way to make money, either be it long or be it short. So on the short side of things, there's a couple of things that we can look at. One of them is that here I'm just really looking for, as mentioned before, an A and a B and a C wave up here, and then one more low down here. Now, it is possible to, in some stocks that I'm looking at, to have 2 lows in here. So it will present a different problem a little bit later on with this. So we could have 1 low or 2 lows. So that's just another issue that we need to work through. At the same time, there is a bearish count, and that would bring this wave 5 down to here at this point. And then that's what I think, when I look at the stocks, that's what I think that's happening, There are some stocks like Google, Alphabet, Tesla, Nvidia, that have moved up quite nicely, but I'm still viewing them as an ABC pattern until proven otherwise. So there is a case for wave 5 to be in here, but I would want to see much more here. I'd want to see an impulse wave. I don't want to, get caught sort of getting folks in, 2/3 of the way up a trend. That's just not good enough. So we have to be patient and wait for the bullish to really come in and, solidify itself, prove it to us that it is bullish. So my bet is that we've got a rally, and then we've got to move down here. We can also have 2 lows down here, depending on different stocks doing different things. So The next thing is the bigger bearish count. So that means that this current low down here is just wave 1 here. We're going back for wave 2, and we're going to have a much sharper move down in all of this. So we're going to have a look at that on the 10K tick chart. I think it's on. So from the top here, we can look at this as the, let's put that there as a V there. That's the grand super cycle top. But there are there are cycles bigger than that as well. But we won't go there just yet. But so in this case, we're looking down for wave 1 and 2, and then wave 1 and 2, and then from here, this can be counted in different ways here. But let's just assume that we've got wave 1 down here. This wave 1 can actually go over here, and in fact it can actually go over here as well. It's not such a big deal at this point in time. I'll explain those a little bit later, but the main point here is that if we take somewhere across the top here as the move, then the 50-60%, so if we just take it from the 4.2 there, which is okay, and we'll just take it to, must get new mouse. So it's weird. Okay, just giving the light a bit of a clean, maybe that will help. Okay, so we'll bring that down just to that number there. So basically from this level to this level here, pinch of salt, we're looking at this space in here for a rally at that point. So I'll talk about this rally a little bit more, this low here a little bit more when I go to another chart, okay? So a 2000 tick chart rather than 10. But the main point here is that we can put wave 5 in different places here for this. Some stocks had a low on the 17th. It's got the 18th here, but stocks had lows on the 17th and on the 15th. That's the reason here. Now with the S&P 500, we made a new low here. The Dow Jones made a new low. The NASDAQ did not make a new low at that point. So it makes kind of a nice B wave here, but you could use it whichever way you want. The other point here too is that the Feds had their little meeting here, and they were really sort of the news really pushed the structure around here. So this could be taken differently here as well. How you count that from the top here, and what you choose here, and how you choose a low here. There's a variety of things that you can do, but I don't think we need to get lost in that at the moment. The main point is that if this is wave 1 here and this is wave 2 here, at somewhere, I mean, I've had this down under here, now I can bring it up to here a little bit. At some point we need to be low here. Let's just assume for a moment that this is the low, and we get 1, 2, 3, 4, and we just move up here for wave A, and then we come back 50-60% for wave B, and then we get a move up for wave C here, some sort of equality, maybe 3.9 or something. Anyway, we track 5 waves up there. Well, the first thing we can do if we make a move up there is to bring this up to the next low here for that. And then once we get 5 waves coming down here again, and then we get a bounce back here, then we can look to short up here. So we're just going to keep bringing this, because we're shorting, we're just going to bring it up from the low here. If I knew that we're going to be, it was 100% bearish, then I would short in the box here on the 5th wave of the 5th wave of C here. We'll do that. But because we don't know, we need to come up from the bottom and catch it at that point. So when this comes down here, that will be in 5 waves coming down. Then I'll have an A, B, C back. So we'll short the B wave here. And then we'll build in short trades over here. Now, the thing with this is that I'm kind of expecting it to come down anyway, but when it comes down, for me, it will be sort of like on more of an angle, say, and then that will help me say, put me where I know, it will help sort of confirm where I'm thinking. If it comes down fast and starts gapping, well, first of all, we need to be in the market, and we need to be building in here in both bear cases, right? We'll be in there anyway. But if it comes down hard and fast and gaps in through here, then we'll know it's going to be wave the third of the third of the third, and then we'll be of the third here again as well. So we'll have another 1, 2 in here that we'll be able to grab. So there'll be the third of the third of the third of the third. That's where we'll be getting in at that point. Now, it may not come down like this, and like I said, it might be on more of an angle over here for that, but I don't know that yet. But we'll certainly be set up, and we'll be playing for that side of it. So in a way, we need to, be it the market bullish or be it bearish, I don't have any solid answers at this point for it. I can see a variety of things, and you know, when we look at markets, let me just have a little look here at this doesn't really matter what stock, this is just Apple, but at the same time, we can see that, you know, this is what's happened to the markets. You know, so calling a low in here or another little bit down here and then building case to the upside is pretty damn dangerous at this point, because the whole thing's gone vertical at this point, you know. So, you know, we have to be mindful of all the possibilities at this point, right? So this just gives you a bit of an eye. I mean, to me, it's a bit of an eye. This trend here really hasn't been rebalanced. I've got it as a series of 1s and 2s at this point, but in a bigger cycle, you could have it as a wave 4. But the thing is, even as a wave 4, it actually comes back to the same Fibbo level anyway, so it doesn't really sort of matter. But you can see that the party, you know, has hit midnight, and folks are leaving, you know. So anyway, we just bear that in mind. This possibility for this to come down is really quite there. So I don't think it's a good idea to be locked in as a bullish count or a bearish count. I think it's good to have no opinion, and we'll just trade the facts. Okay, so all that said, we're going to go to this tick chart here and just have a bit of a look at this here in this case. So what are the interesting things with the S&P 500? As I mentioned, the same with the Dow Jones. It took the low out here, but I think, you know, when you go back to this little area in here, we were looking for an A wave, a B wave, and a C wave here. Now, we don't really have the best C wave up here because the Feds were shooting the breeze. And the thing is that, do we take that as the top, or realistically, should we take that as the top? That looks like a nice little impulse wave up here, and then that would leave us with 1 here, 2 here, 3 here, 4 here, and 5 here, and then that would be the low here. Because if we do take it as this one here, then we'll be left with 1, 2, 3, 4, 5 to here. So that means the low really needs to come over to this point. But if it comes over to here, then we've also got 5 waves down here, so that can't work a little bit. We could go an A wave and then A, B, and C wave here for the B wave. So an A, B, and C over here for that. So you can see that it starts to get a little bit sort of complicated. So when I've been looking at the stock market, some have had this as the low and some have had this as the low. Even on the NASDAQ, it's quite clear that this one is above that. I think the NASDAQ here. So this is the NASDAQ here. So the NASDAQ didn't pull down here in this case. So in this case, it would be logical to look at that as the A wave and the B wave, or in fact wave 1 here and wave 2 here. And then when we come back over here, so we can't label this wave 1 and 2 because wave 2 can't go below wave 1. So labeling this wave A and B kind of makes a little bit of sense, you know. So then we'll come back to the NASDAQ in a minute. Just so I wanted to talk about this and these lows and this here, and this is where sometimes you just need to be a little bit philosophical and try to understand what other markets have done and doing, rather than just trying to get to a point with this and you know put this here. I mean, don't forget this could be wave one over here as well with all of this. You know, but where do we put that wave one? Is it further over to the left or to the right? You know, and then you know, I mean, if I took, you know, because the other thing is too is that I don't think it can fail just here, because we still need another little leg up here, but it's kind of good to understand from this top, even if you took the low from, where are we talking about here? We're at the 61.8%. If you took that as the low here, you know, if wave one was sitting here, then all of this would be an A and a B here, as an A, B, C here for the A wave and a B wave. We still need 5 waves up here. We're at the 61.8% in that particular case anyway. So otherwise, if we took it from, the logical thing to do would be to take it from this leg here, and still at the 61.8%. You know, we're near enough is good enough, but we can see that in this case, where are we? I haven't counted that up there, so I have counted. The NASDAQ's got more definition here. It's got 1, 2, 3, 4, 5. So that's the first wave for that one, and then we've got 1, 2, 3, 4, 5. So it's just on the third, coming back for the fourth there. So we could just, I haven't counted this up with this one, so we could put that there and that there. That would be I wouldn't be far wrong at that point. We'll still need another 5 up here. So we can have this as an A wave, a B wave, and 1, 2, 3, 4, 5 up here for a C wave here for that. And then have this as a B wave, or wave 4, or wave 2. You know, there's a whole thing that could be at that point. I mean, all I know at this point, what's safe, is that we can short under this level here. That's the safe short trade at this point. Now, I know that we can get further up the food chain for that. A lot of stocks that I'm actually looking at have all of this up here as the A wave up here, pulling this back here for the B wave here, and then having the C wave up here. So even if we were looking at wave 2, we still need to be further up here for this wave 2 up here, or wave B up here. It just doesn't really matter. There's different ways you can count everything, but I understand all of that, and understand. I understand all the implications of that. I know that we're in a really sort of we're in a tough situation, you know, and but we need to sort through it to get trades out of it, you know, solid, safe trades. You know, that's what I'm kind of looking for. So I'm thinking that first of all, we'll look at this as as an A and a B here, and then 1, 2, 3, 4, 5. So this top is going to be important. Once that top comes in, if we take the low of where are we here? That would be the ABC, or could we just take it from there? No, we really need to take it from there as that finishing. So that would bring us pretty close to the 8. I'm just going to lift it above that a little bit, but it's not a biggie. We'll adjust it later. So that B wave can bring us back into this space here. So that means that once that's been done, if we get the B wave in here, we're going to get a bounce, which is really nice to have it at large numbers. That makes it really nice because, you know, it's going to bounce there anyway. But that's where we can start to, at this stage, we're here at the moment, but our next move will be to here, because we will see this do its thing here, and then we'll see that move back to here, and then it's going to bounce off that point. Now, it may only get to here. This might be down for 1 here and back for 2 and then go down here, but we'll be prepared for that because we'll be short at that. We're looking to short at that point. And if it goes up to here, then we'll look at the top here, and this will be 5 waves between B and C up here. And when we get to C here, we'll have the first 5 waves down here. So we'll get that as confirmation, 5 waves down, and A, B, C back up. We'll short the B wave over here. So this one will eventually come back over to this point, and then we'll end up adding short positions all the way through here. So I'm just going to keep talking about all of this and keep shooting the breeze over it, because we need to be, you know, we need to sort the the oats from the chaff, so to speak. And like I said, if this market's going to be bullish, then we want to get. It's a bit hard to see when the B wave goes down here. That ticks the box for being bearish. But if we do get 5 waves, we want to see a nice, this would be 1, 2, 3, 4, 5 for 1 and 2 and 3 and 4 and 5 up here, then an A and a B and a C, and then we'll buy it back here anyway, and then we'll be building up to the long side at that point. So yeah, that's about it in a nutshell. And it's the same with the NASDAQ here as well, but slightly different. But I'm going to look at that as the A wave, the B wave, and we've got clear 1, 2, 3, 4, 5 here. And then we've got 1, 2, 3, 4, 5 in here for the third, fourth, fifth. 38.2% comes in at the 11.5, which is a medium level, carries a bit of weight. We can see that this is all about 11,500 here. Of course, the other number, that's the main number here for all of this. 11,000 is important, 12,000 is important. You get tops and bottoms at those numbers, but it's the 11.5 where the balance of the correction as it matures will finally play to a point where we'll be moving either long or short. This move here, we could label this 1 and 2 here, but I don't think that's the right thing to do based on the S&P. So in this case, we should just get one more move up to here for wave 5. So if you've been trading long here, then this anywhere in these old highs here, this is group 2 here, so 11,650, 11,720 and 11,008. So the market will stall in that range there. So really, I just want to try to figure out if we've got an A, B, and C up here, and then we come crashing down, or we get a wave C here, which we'll call wave A, and then B, and then C at that point. And there are some stocks like this. There are some stocks that are finishing here as well. So we'll need, in the next session, we'll need to have a closer look at what's going on in here as well. But the same thing goes here as well. We can look to be short down here at this point, and we can lift that up. We don't want to lift it up here to get caught by the B wave and short, and then the market moves up. So we have to be patient and mature and wait. I know it's hard for the young bloods, but we need the market to come to us. We don't want to go to the market. We don't want to chase that market. Anyway, that's that. So you can kind of get the picture of what I'm sort of thinking about. My story hasn't really changed. I just want to take in all the different facets and we're working through them all. That's all, and that's what we're doing. So you might have other ones as well. It doesn't mean that I'm right or you're wrong or anything like that. It's not a matter of being right or wrong. It's a matter of making money. That's where our main focus should be at this point. So yeah, so here it looks pretty clear too that we've got the Russell for the A wave, the B wave, and then 1 and 2. I've got this as 1 and 2 and 3 and 4 and 5 in here for the third, fourth, and fifth. That's a 38.2% retracement level there. That's coming in nicely. So that's a bit butt ugly, that thing there, but not sure how the best way to count that. But it doesn't really matter. Nothing, like I said, nothing really. We know the market's going up, right? We just don't know what it is. That's all. So it's okay to be long, as I've mentioned, in these markets, and but this is a time to be sort of tightening things up at this point, and we just need to see if we're going to get a B wave back. If we get 5 waves here coming down, if we get 5 waves to the 61.8%, then I'll know that we're bearish. And then in that case, what we'll be doing is looking for the A wave, the B wave, and the C wave back to retest that 1700 here in that case, and same with the other market. Then we can look to short under here, because at the moment we'll just bring them up. We'll look at we can short. It's a little bit cheeky. In fact, I won't put it there at all. It doesn't really. I'll just get you into trouble there. So we need it. needed under the this 1650 here is a medium level. It's halfway between the 13,000 and the 2,000. So anyway, it's another odd, weird number. But 1500 and 1650 are medium levels. Are also part of group 2 as well, this one, but that's another story. So yeah, so we could lift it up to that point. So we still need to get more information up here for this, you know. And it's the same for, this is the bearish picture for the Dow Jones. So we've got grand super cycle here, primary 1, intermediate A, B, and 1, 2, 3, 4, 5 for C of 2, and then down for 1 and back for 2, and then going down for 1 and 2 here as well. Is this bear case the thing with it all? Not that sure. It's kind of interesting here though, isn't it? It's sort of like you can kind of get 5 waves in this first move here, you know, and then probably an A and a B and a C here, so 1 and 2 here, and 3 and 4 here. Anyway, I'm just playing with the low here. We're getting a bounce off the 30,000, which is, you know, major level, and the same story goes here. So we could end up much further up here with all of this. It doesn't really matter at this point. We're just, you know, it's still in its early days just yet. So nothing really to do here, but we'll keep an eye on these. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.